Kao što smo već najavljivali, povratak međugodišnje inflacije...
Year-on-year inflation to fall back within the target tolerance band by October and to stay within the band thereafter. You will notice that our new inflation projection is almost the same as the one released in May. The new projection of GDP growth in 2013 also remains unchanged at around 2%. The projection of GDP growth in 2014, however, has been revised down from 3% to around 2.5%, as the growth prospects for Serbia's main foreign trade partners deteriorated in the meantime. Still, the expected growth of our economy remains above the average of its Southeast European peers. The economic recovery is undeniably slower than we would all like it to be. But given the intensity and the scale of the crisis, it is quite clear that the recovery cannot be swift and without difficulties. The good news is that it is becoming increasingly evident that domestic economic activity is on the path of sustainable growth and that external imbalance is narrowing. Growth projections for the euro area have been revised down. According to the European Central Bank, the International Monetary Fund and consensus forecast, the euro area economy will contract by 0.6% in 2013. Still, an improvement in the early economic activity indicators in the last 2 months heralds an end to the recession. Particularly encouraging is the slowing pace of contraction of highly indebted euro area members. The European Central Bank reduced its main refinancing rate in May to the historical low of 0.5%. The Fed, by contrast, suggested that it might taper its quantitative easing through 2013 and wind it down altogether around mid-2014 if economic growth becomes firm enough. The Fed's hint gave rise to instability in the international financial markets as investors reacted by reducing their exposure towards riskier markets. The yields on sovereign bonds rose, country risk premiums increased, and the currencies of nearly all countries in the region depreciated. In the case of Serbia, this effect was further amplified by the IMF's statement on the necessity of taking additional fiscal consolidation measures. Similarly to other central banks, the NBS intervened during this period by selling foreign exchange in the foreign exchange market. The situation in the international financial markets gradually eased in the course of July. MB for Serbia fell from the June high, and the dinar edged up slightly against the euro. Besides, Fitch affirmed Serbia's credit rating, ending speculations of a possible downgrade, which emerged after Moody's assigned to Serbia a comparatively one-notch lower rating. External imbalance narrowed in 2013 faster than we expected. In the first 6 months, the current account deficit was by 53.5% lower compared to the same period last year and equaled 5.7% of estimated GDP. Rather more important is the fact that a reduction in the current account deficit originates primarily from this significant increase in exports relative to imports, 20% versus 2% year-on-year. Positive changes in terms of narrowing of external imbalance are also corroborated by increased exports, not only in the motor vehicles category, but also in other sectors. The chemical industry, production of rubber and plastic products, electrical equipment, etc. The startup of investments, primarily in automobile and oil industries, and fiscal consolidation are expected to bring down the share of the current account deficit in GDP from 10.5% in 2012 to below 7% this year. This share should continue to decline over the coming years. GDP growth in 2013 and 2014 will be led mainly by rising net exports and to a lesser extent by private investments. According to our estimate, private consumption will decline this year because of lower real income and sluggish growth in lending activity, while the contraction in government consumption will be due to the implementation of fiscal consolidation measures. The deviation from the projection is equally possible in either direction and depends primarily on the speed of economic recovery of Serbia's main foreign trade partners and the outcome of this year's agricultural season. Year-on-year inflation moved in the second quarter, in accordance with expectations presented in the May inflation report. Inflation continued down and reached 8.6% in July. However, the year-on-year inflation rate still remains relatively high, but this is due mainly to price growth recorded from August to October 2012. Of the mentioned 8.6%, as much as 6.9 percentage points relates to price growth in that period. In other words, the average monthly inflation rate from November last year to July this year was 0.2%. Inflation declined as a result of past restrictive monetary policy measures, a reduction in raw material costs in food production, low aggregate demand, and relative stability of the exchange rate. According to our estimates, with the exclusion of high last year's price growth from calculation, year-on-year inflation will accelerate down in the third quarter. The key disinflationary factor in the coming period will be lower food production costs, expected mainly on account of a further reduction in prices of primary agricultural commodities. It is quite certain already that this year's agricultural season will be much better than the last one, both at home and abroad. In view of this, raw material costs in domestic food production are expected to be lower at least until the next agricultural season, and so are the rates of food inflation. On the other hand, administered prices will rise this year by around 10%. And will contribute 2 percentage points to inflation, mainly because of the electricity price increase. As we have emphasized several times already, this will not jeopardize the return of inflation within the target tolerance band. Also, the weakening of the dinar in late May and in June may send upward pressure on import prices, but the intensity of this pressure will depend on the importer's ability to increase prices against the backdrop of depressed demand. Given all of the above, we expect that inflation will return within the target tolerance band by October and stay within the band thereafter. Let us recall, the National Bank of Serbia's inflation target is for plus minus 1.5%. Guided by the analysis of current and expected macroeconomic developments, the Executive Board of the National Bank of Serbia decided last week to keep the key policy rate at 11%. Assuming agricultural commodity prices decline further, no external shocks occur, and fiscal consolidation is implemented as planned, the Executive Board will consider further monetary policy easing in the coming period. It is indisputable that our economy is slowly recovering. However, in order to ensure sustainable economic growth and keep inflation within the target tolerance band, additional efforts are needed towards a further reduction in internal and external imbalances. An important step to this effect is the adoption of the revised budget and new measures of structural adjustment, which is why the National Bank of Serbia supports the government's commitment to implementing the announced measures. Consistent implementation of these measures would improve investor perception of Serbia and create the leeway for further monetary policy easing. Thank you for your attention, and it will be our pleasure to answer all your questions regarding the inflation report.
Milka Babic, Radio Belgrade 1. How do you explain deflation in July, monthly deflation? In July, we recorded a drop in consumer prices of 0.9%. If you look at the structure of that growth, the key reason, the key driver of this growth was of seasonal character. That is the seasonal decrease in vegetable prices. But you have to take into account that the seasonal factor worked also last July, but we had negative inflation growth rates, which means that monetary policy and other economic policies have worked towards reducing inflationary pressures in other segments. And for this very reason, the lowering of vegetable prices resulted in a negative general inflation rate in July. So we have to look at this from the aspect of the effect of all economic policies and monetary policy as well. Mirjana Brajković, RTS. I can see that you expect GDP growth in 2013 and you expect 2% growth in 2013. We expected higher growth in the last quarter, but it turned out lower. Is this an over-optimistic estimate? As regards our expectations of economic growth, I can say that we have kept our projection for this year at 2%. The key driver of growth will be net exports, so nothing changed in this respect. For the next year, taking into account that in the meantime the economic outlook for our key foreign trade partners deteriorated, we have revised our expectations for economic growth in 2014 to 2.5%. We were not surprised by these developments. The first quarter was a bit stronger, but this was also a result of the stronger base. And the second quarter was fully in line with our expectations. The risks are present in both directions, both downside and upside risks. The first half of the year, when it comes to developments in the real sector, are very positive. We have noticed even a stronger expansion in some of the segments of manufacturing. And what is also very important is that in addition to automobile and oil industries, which were the drivers of growth within manufacturing industry in the first half of the year, we can see a noticeable recovery in the chemical industry and tobacco industry and other branches of manufacturing. And this will definitely contribute to economic growth in the second half of the year.
What worries many economists is that there are no investments. So what has been the inflow of FDIs since the beginning of this year? It is already now certain that in terms of FDIs, this year will be more successful than the last one. The last year experienced an incidentally low inflow of FDIs of a very small amount, and so far we have had an FDI inflow of close to 400 million euros. Our projection is pretty conservative, and it equals around 700 million euros for the whole year. Contributors will be manufacturing, trade, and the energy sector. What is positive is that given all the exceptionally positive macroeconomic indicators and also expecting some kind of recovery in the Eurozone, and in general, in the economic activity of our main foreign trade partners, we truly believe that FDIs in the coming years will be important, meaning that in terms of their importance in financing, the current account deficit will increase. So for this year, we expect around 700 million euros net. So this is the net amount. This includes a gross inflow. So this is a net amount. So last year we had an incidental year because we had an outflow because of telecommunications already in the first quarter. Any more questions? For the last several months, the Serbian government has not been functioning to the proper extent, so the key person in charge of the economy has resigned, so to say. So what are the possible consequences, or perhaps there will be no consequences on the Serbian economy? So right now the government is undergoing reconstruction. What is important for us is that this has not had any impact on the economy in the way that you suggest, meaning that the Serbian economy is still functioning, its finances and monetary policy do function. The important thing is whether this will affect the National Bank of Serbia and decisions of the central bank. So I can say that certainly this has not exerted any impact on decisions of our central bank because our decisions are motivated by completely different reasons. So what is important for us is that the reconstruction of the government is a good way to strengthen the government primarily in the economic aspect and to take measures directed towards structural adjustment, which would in the long run give the basis for monetary policy easing than it has been the case so far, meaning that they should implement fiscal consolidation and structural reforms, and this would open the room for further monetary policy easing. This would contribute to stability in general, which is very important when foreign investors make decisions on whether to invest in our country or not. Daniel Nišević, Blitz. So you said that the key disinflationary factor in the coming period will be lower food production costs. Can you tell us from the beginning of this year what is the rate of food inflation? So you expect that this rate will be lower until the end of this year. So what will be the rate of food inflation? As for the coming period, a reduction in global food prices indicates this, and they move between 25 and 30%. This means that there will be a reduction in pressures in food production, pressures on the cost side. So this will impact on prices of processed food, primarily in the coming period, let's say in the next 9 months. So there is no direct spillover, but there is a gradual pressure to have lower prices than in the past period. So this is the figure for the coming period. As for the first 7 months of 2013, food price growth has been somewhat below 1%. I'm referring to processed and unprocessed food, including fruit and vegetables. What do you mean, do you expect a decline in the coming period? that we will experience some decline. Even the stabilization of these prices has a disinflationary impact on movements in the future period. So we expect inflation which will enter the target tolerance band by the end of this year, and we will have lower or negative growth rates when it comes to food in the coming period.
Bloomberg, when you explained about your expectations of reconstructed government in the part of economy, what we can see now is that there will be zero tolerance when it comes to tax and restructuring of large enterprises that have been under restructuring for a long period of time. How is this different from what has been defined by the revised budget in July, and what concrete change do you expect? When it comes to the tasks that are ahead of public finance and ahead of the new Minister of Finance, what's most important is everything regarding the short term, and that is to ensure government financing. This means that we need to ensure certain borrowing, but automatically from this we have the need arises to reduce borrowing, that is to reduce the deficit to a significantly lower level. So fiscal consolidation and structural adjustment are something that is absolutely necessary for Serbian public finance, regardless of who the minister is. So this is something that we must do. To the extent we manage to entertain foreign investors and to ensure somewhat higher economic growth, this could mean smaller need for a cut in expenditure. But if we do not ensure economic growth, then we will have to be more serious when it comes to cutting the expenditure side of the budget. This is something that appears as a kind of a normal pattern, and which should definitely have a positive impact on macroeconomic stability in Serbia. I mean, it would remove uncertainty over a relatively high share of public debt in GDP. It would either through lower borrowing or through a rise in GDP, and it would contribute, it would make it easier for us to respond to any of the future challenges stemming from external environment and changes in the international markets. But what will be a change for you as a central bank relative to what you have had so far? So if this direction of economic public finance policy remains unchanged, zero tolerance when it comes to tax, and if the aim is still to reduce the deficit, what is the difference for you? We expect the implementation of the proposed structural adjustment measures. So we expect the government to follow through and to deliver everything it has committed to. Based on this, scope will be created for monetary policy relaxation. So it is not only important to set a goal, but to achieve it, we need to see tangible results in the real economy. Okay, since there are no further questions, thank you for your attention. See you in 3 months.